Welcome to lesson 2 as part of the mini-series lessons. Today we'll be looking at high time frame liquidity, namely the weekly, and how the weekly has an important role to play in the way we trade. If you think about it, we are day traders. So each day, daily, we take a trade and we trade during the week, which is obviously when we trade during the week. So we kind of need to be concerned with where is the weekly going and where is the daily going? Where is the daily draw on liquidity? Why do we know this? Why do we need to know this? Because in the beginning of the week, we start a trade, and that weekly candle is going to form. It's either going to go up, it's going to go down, it's going to go sideways, or it's going to go up, down, and sideways, all in 1 week. So we need to identify more or less and try to anticipate where is the new liquidity potentially heading to, where is price heading to, where's the liquidity drawn to. So we're going to look at another concept that we have spoken about in the bootcamp, which is expanding on that and giving more information, insights into it. So basically, it is this. When we look at a impulse leg towards the upside, that's our impulse leg. So we're going to get to the weekly. I just want to reiterate and say a few things on this. That is our impulse leg. This can be the 5 minutes, the 15 minute, the 30 minutes, the 1 hour, the 4 hour. It doesn't really matter the time frame as long as you use it in unison with the higher time frames or the time frame or different time frames. You'll understand now. So we have this impulse leg. Let's say it is. Let's make it very simple. Let's say this is a 1 hour order block. We see price reacting in this area. We see price pushing up. Perhaps we broke structure pushing up towards the upside. Something like this. We have a structure break. Now we want to know, we're looking for price to come back. So now we need to look at this leg from the low towards the high. Then this is our order of relevance, things that we need to look at inside this leg from the downside towards the upside. These are the things that we need to pay attention to in that leg towards the upside. So what do I mean by this? We want to see price coming back either to the imbalance, an order block, or previous low, which would then often be a sweep of a previous low. This is the level of importance. This is the hierarchy of liquidity. So first of importance is the imbalance, then the order block, and then the previous low. And that's how I derive those profiles also from looking at them in combination. So if price comes back and we have a clear level of imbalance, and we have maybe a previous low over there, that's a good reaction point. Or we get a nice full body order block with imbalance, and that's then where price will be drawn to. Or we get nothing and it's only in wicks and there's no liquidity in this area, then price would potentially just sweep the low and then give us another opportunity to get in on the trade. So that's just a few things that you need to understand and look out for when looking at liquidity. It's very important to understand. Let's get this out of the way. It's very important to understand this concept of liquidity, where we see price moving from one side to the other. So if we see price pushing up there, we see a pullback, and now it reacts off of the order block. What is our first target? Well, our first target would be the imbalance in the premium. Secondly, if it doesn't respect it, we'll be looking for a reaction at the order block. If it doesn't respect the order block, we'll be looking at a reaction at the previous high. And then ultimately breaking the next high, which is then this obviously high, for a potential sweep, and then a continuation maybe lower. Now, then you have this new leg towards the upside. Now again, you can look for the imbalance, order block, as well as the previous low. Now look for those liquidity points again to see where can price react off of. We combine it then with a session with maybe an Asian session consolidating. We see then a session opening and we see the manipulation down into this order block combined with the high time frame view, combined with the order block, and we can look and we can take an aggressive trade targeting. Perhaps this is now a 15-minute high, targeting the 15-minute high. So you see how we incorporate this liquidity concept within our trading. We're going to look at some more examples in just a bit. So now we've maybe, let's do this. Let's say we've broken the structure. Sorry about the dogs playing outside. Now we broke the structure. Now we have a structure break over here. This is now our structure break. Now we have a new leg to work from. It's important that the leg should break structure. Now this leg towards the downside broke structure. We don't want to sell in this 50%. So this is our 50% area. We don't want to sell in this area. We'd rather look for buys up into the selling area, which is about the 50%. So anywhere in this area, we would be looking for buys. So we don't know where price is going to stop, but then we can look at these areas and we can first try to find the imbalance, the order block, previous high in that area, in this leg towards the downside for us to take a trade from. Because in reality, this leg towards the downside can look like something like this, creating previous highs, creating order blocks, imbalances, previous highs, order block, imbalance. We're looking to see price trade back up into one of those areas before us taking another short. But when we're down here, we could potentially look for the long towards the upside. Now we see price pushing up, creating a push, a reaction. This reaction potentially broke structure on the left. Now we're looking for price to create a pullback, creating a pullback, potentially in one of these areas we're looking for, and then a continuation up. So again, we can then again place this tool, and we can again look for these areas. Obviously, they're not too big, but you get the point. Now we're looking for imbalance, order block low in the discount area, take a long from in this area, and we align it with the lower time frame 1 minute concepts that you'll learn on later on, but that's spoken of in the bootcamp. So that's just the basic principle and something that I wanted to explain to you guys. So now we're going to look at the weekly liquidity. So we'll take this away. So every week we need to identify where is price most likely heading to. So we'll start off with this week, and because this week is almost over. The previous week, the 1st of November, opened like such, and we can then plot out where the possible liquidity areas are. So we have a previous low. We don't necessarily need to. So what we can do is, if you want to, you can place this, and you can see that's our most recent swing, and we are reaching for the discount. So the liquidity areas are where's the possible liquidity areas in the discount if you want to take buys, but we need to look at more than just buys. But potentially we have a previous low. That's all that there is. There's no imbalance and there's no order block in this push towards the upside. So there's only a previous low. So that's obviously an area for liquidity. Towards the upside, is there anything in the premium? Well, not really. We have this previous high, last week's high, and then, well, there's nothing really else that we can look at. We can possibly look at this level as an area where price could sweep into, tap into this previous, let's call it support. So we can just think of it as support being broken, but this is still the most relevant low that we look at. So now we've mapped out the liquidity. So starting off, we know always that when the week opens, whenever that is, price would usually create a wick, create the body, and potentially create a wick towards the downside by closing. So maybe this will be the body where it closes, then you have your wick and your wick towards the upside. But the most important thing is that price will open over here, which is then the area where price opens. When Sunday closes, the new week will open the next week. That is where price ends. Then we'll look for a new opening. And then we want to see price potentially go up and then go down. So just from a weekly point of view, we could already have deduced or anticipated that price is going to go bearish and sweep this liquidity, because from a liquidity point of view, if we implement the concept that price reacts off of the imbalance block and a low in this case. What is closest? What is the thing that we can see here on this chart? Well, obviously it is the previous low. So that is where the liquidity is. And that is then where we would want to see price trade to during this week. But we could still see price going up, creating a wick. We don't know how far up it will go, creating that wick, and then move down lower to take the liquidity below this low. So that beginning of the week, that would be our weekly analysis. And then see what happened. We saw price trade up first, create the wick, and then started trading down, grab the liquidity below this low, obviously then also the liquidity below that low, and moving towards the downside. We don't need to look to the left, and because we can't really identify anything in here. We just need the most recent price action, potentially the last 20 or 40 days, and we need to identify where is the liquidity in those areas. So let's have a look at another example. We're just going to play back over here. Let's take this away. This is now a few weeks ago, and this is the 9th of August. So already we can now anticipate that we have this leg towards the downside, push down. The problem with the difficult thing with this one is that we did not break any structure with body closes. We just wicked below it. So that's something to consider. But we can also see that this push towards the downside left a wick, so we know that wicks usually gets filled. Then we can also see, just looking at price action, that we have this wick. Price failed to make a higher high, and then price again after that wick, made a lower low again. So on the lower time frames, we can see that price is moving towards the downside. So for that reason, we can then also just use this tool and we can plot it from this low towards this high, like this. And then we could potentially just make this a bit darker so we can get more clarity on it. So now we can start our weekly analysis, basically, for the high time frames. We can see there's our previous weekly high. Well, actually, this is the previous weekly high, but we can use this one as well as relevant because it's in the premium. So we could potentially see price sweeping either one of these two levels. So I would keep them both on and then move towards the downside. What is on the downside? There is another previous weekly low, and we have all of this on the weekly time frame to potentially get filled. So we could potentially anticipate price. We'll see how the week goes, but we could potentially first take the liquidity on the upside and then move down lower, taking the liquidity below this low and this low. So where is the first area of liquidity? Well, we don't see an imbalance, but there's a low. And then potentially on the lower time frames, we have some order blocks as well. Let's see how that week played out. So we didn't sweep the liquidity, we just started pushing down. So we took the liquidity below this low, all the way down, coming down to fill this wick. Now, we still don't have a structure break, but we are in the discount now. So we trade from discount to premium. So now we can anticipate that now we have some imbalance. You can see in this leg down. Let's just take this away. It's not going to confuse us. Now we have imbalance. We have this high. And that's basically all we need right now. And also potentially this could be a higher time or a lower time frame order block because there would be some areas being broken on the lower time frame. So we could potentially anticipate price to move up, fill this imbalance. So directly we could potentially expect buys early on in the week. And then we could potentially later on in the week see a pullback because we have now liquidity below these lows as well. So now we have our liquidity areas marked out below this low, in this imbalance, and above that high. Previous high, imbalance, maybe an order block on the low time frames. I'm not convinced, but we've marked it out. Let's see what happens. We push up, Fold the imbalance. So actually, this is the new week, sorry. Let's see, we swept the highs. Now I will potentially look for shorts. Let's see, we go down. A consolidating week. What happened in this week? Early on in the week, we swept the highs. Now we've created the wick. Where's our next area of liquidity? We have that low over there. We still have this low. So now I've marked out, we have a sweep, we swept it. Like this, let's get it perfect. So that area has been swept. So I would potentially just use this check mark. We did check that mark. So these are the areas that I'm still looking for price to trade to. So let's see what happens. We trade down, liquidity bar below this low. And let's see, do we go all the way down? Liquidity below this low. Guys, I did not pay attention to how price action. I did not know it's going to do this exactly. Obviously, I've seen the chart before replay, but just marking out the liquidity areas and where price is reacting off of and moving towards, we can easily identify, well, not easily, I'm saying easily, but with experience and exercise and practice, we can anticipate where the weekly candle will be trading to. And that's the one thing and the most important thing that we as traders want to do. We want to, for day traders, we want to know where is the weekly candle going? Where is it going? Because if we know where the weekly candle is going, we can know if we should prioritize longs or shorts. Ever since we swept this high, we knew that we should prioritize shorts. And you take short trades all the way until you've swept the liquidity below that low. Hope that makes sense. Guys, I'm going to wrap it up for this video. That's the basic concept. Go and apply this to your own charts. Go on the weekly, use the playback button and see what you can discover for yourselves as well. Yes, have a nice day, evening, wherever you are, whenever you watch this. I hope it made sense. Leave me some comments, feedback if you enjoyed it. If not, also some critique would be good as well. And then I'll see you in the next mini lesson coming soon. Okay, bye.